Let's talk about the electric mobility space for a bit, because we've seen a regulatory change coming in as far as the FAME policy is concerned. But on the three-wheeler side, actually, the offtake has been lower, and which is why some of that allocated money has been moved over to the two-wheeler side. So a life without subsidies, how do you read that landscape?
So subsidies, let's talk about first why a subsidy is essential. Because in general, we shouldn't be subsidizing automobiles as a philosophy overall. The transition to electric requires subsidies to be able to deliver vehicles to consumers at more or less the same pricing as we can do for ICE vehicles. That's when consumers are going to adopt electric vehicles. It's about adoption of that technology. And that's going to be required for a certain time frame till that technology becomes mainstream, after which you don't require it. So that's the essential part, and that will be required for PLI schemes, as is the case right now. Our three-wheeler business has gotten the PLI approved. FAME is going to be essential for that as well, because consumers want electric. And if we can facilitate that to happen with support from subsidies from the government, that's going to put us in a much better place. That's going to put the industry in a much better place, but the economy in a much better place as well, with less dependence on oil, with a much cleaner environment. So that's really the benefit of the subsidies.
But, both, as you said, that you've managed to get the PLI scheme going as well, and of course the FAME subsidies are available, though, as I pointed out, the offtake for three-wheelers has been lower. What's the plan as far as the PLI is concerned in terms of being able to meet the production targets that you've committed to?
We are on track for that. As I said, our three-wheeler business is really looking at growing 5x in the next 2 years. So we have a very aggressive plan that's put in place. And today we've got 65 to 70% market share as well. So we are in a good position. We've taken leadership space here. And beyond three-wheelers, we see a lot more potential on the four-wheeler side as we come out with our 5 born electric SUVs next year.
Yes, and again, you've preempted my question on the 5 born electric SUVs. Confident of being able to meet that target? Because it's a fairly ambitious plan to put 5 out in the market.
It is an ambitious plan. We put that plan out a little more than a year ago.
Yeah.
And today we are slightly ahead of plan. So we hope to stay that way.
Slightly ahead of plan, meaning? Could you advance things, or?
As I said, at this point, slightly ahead of plan, which is probably a month or two. But this is an area where we will always have some challenges that come in. We've had multiple challenges in the last year as well. And I think, again, the team has done a very good job of staying on plan for this. Right now, we're slightly ahead. So if we stay at this level, then yes, we will advance it a little bit. But there's a lot to do.
There's plenty of action in the auto space, more so in the two-wheeler space. You talked about Yazdi and Java. We've just seen Harley and Hero announce their partnership and put a product in the market. Triumph and Bajaj putting out their product in the market. And at some point, I would imagine TVS and BMW will be doing more as well. What is the role that you hope to play in that space, if any at all, given the fact that you do have marquee brands sitting in the stable?
So we love competition, right? We've been written off many times. Right? In 2002, we were written off saying Mahindra is not going to survive. You've got all these foreign brands coming in, right? 5 years ago also, we were sort of written off saying you got Hyundai and Kia and others playing a big role in the market. We've come back strong every time. Right? In the SUV market, we are number 1 now from a revenue market share standpoint. In the LCV market, we're number 1 by a huge margin. In the tractor business, we're number 1 in a huge margin. Electric three-wheelers, we're number 1, again with a huge margin. So we love competition. And it may take us some time, sometimes, to really get in and develop the right set of products that are required for competition. But I feel that our business will do that.
Is that a focus area for you?
That is a focus area for us right now, because we feel that these are 2 very good brands. And we feel that with the strengths we have and the partners we have, this is in partnership, we feel that we should be able to put this business on a very good track.
And by when? What is the timeline that you're working with, at least as far as this two-wheeler plan is concerned?
For all our growth gems, the timeline is that we want to grow 5x in the next 5 to 7 years. So that is the umbrella timeline. Each business will have certain challenges that it has to face, and that's something we will tackle as we go.
You know, you spoke about individual businesses and the challenges that you see for some specific businesses, but at a group level at this point in time, you know, things are looking good, but what are you most concerned about? What would be the key risks or the key worries on your dashboard today?
I think what we're most concerned about is actually risks that we don't know about, either from a geopolitical standpoint or from an economic standpoint. We've seen many of them come through in the last 5 to 7 years. So our teams now are trying to gear up for what-if scenarios and have various optionality plans laid out. So that's really the challenge. In terms of business as usual, we are on top of what we need to do. And that's where our teams feel very good about where they are. We've been able to deliver. We've had tremendous results, not just last year, but multiple years in a row right now. ROE is at 19.9%.
The target was 18, so you're ahead of that.
The target was 18, and we had said 18 in 5 years. We got there in 18 months. So we're ahead of that.
But so are you going to upscale the target now? Is 18 going to move higher, or are you comfortable for now?
No, we're not upscaling it. We have had those conversations with our investors because what we're upscaling is growth. And our investors are happy with 18% return, but they want faster growth. So that's what we're going to do, and that's the reason why I'm not rounding off to 20 years yet, because we will be closer to 18, but we're really ramping up growth in a significant way.
You know, two of the things that you chose to focus on over the last few years, repair as well as recovery and rationalization. The repair done, you believe, especially in terms of impairments, etc., is that now a thing of the past?
Yes, repair is done. We've exited close to 15 businesses. And we've had a separate category of what we call loss-making businesses. Collectively, they were 3,429 crores to be exact in terms of losses in F20. There are 26 crores of losses in the last year. And that last 26, we know exactly where it is. There are 2 businesses that is work in progress at this point, and that's something we will complete soon as well. So all the heavy work is done there. And that really gives us time to focus on growth now. So we've been very structured and methodical, if I may say so, in our approach, which is let's take a particular problem, tackle that, and whatever we do, let's do it well. So let's not spread ourselves too thin, and that's worked.
Well, clearly, it has worked at this point in time. So let me end then by asking you if growth is the key driver, the key priority at this point in time. By the end of this calendar year, are there any specific milestones that you have, or for this financial year, any specific milestones that you've set for yourself?
There are specific milestones for each business. And the first is actually making sure that the mindset for growth is there. That's something we've actually had to do a lot of work in the last couple of years, because it's not easy. If a business is growing 20% a year, generally would feel pretty good. And if we go in and say, 20% a year is not enough, we need you to start thinking of 5x growth. That is a very significant change in mindset. So that's step one. The second step is to look at, do we have the resources to make that happen? Do we have the talent? Do we have the bandwidth that's required for it? Capital, yes, we have, but what is capital that's required? Do we get the returns from it? So it's really making sure that we have all the resources. And then the third is a strong implementation plan that we will then track regularly. So each business is at different stages in evolution there. And the good part is that most have now got that growth mindset and have got most of the resources in place. So a lot is about implementation.
And largely organic growth is what you foresee, or do you believe that across each of your businesses, M&A is going to be a crucial growth driver?
It will be a combination of both, but what I will say is that the bar for M&A is extremely high, because we have to be able to deliver what we would expect when we go and make an acquisition. And therefore, the conversations always are about, it's exciting to go and see acquisitions, but let's talk about the conversations every month after the acquisition. On what was our target, have we delivered or not. And as we do more of that, I think what we will see is some acquisitions, not a whole lot, but acquisitions that will actually deliver what we expect them to when we buy them.
Well, Anish, it's been an absolute pleasure. Thank you very much for sizing things up for us in terms of where things stand, but more importantly, laying out a roadmap of where you believe the group is likely to be, including the milestones that we've set for each of your core businesses as well as the growth gems. It's always a pleasure. We wish you the very best of luck. Thank you so much for having us here today.
Thank you, Shereen. Pleasure being with you today.
Well, with that, it is time for us to wrap up this edition of On the Record. From all of us here on the team, for now, goodbye. Many thanks for watching. Do stay tuned. The news continues on CNBC TV 18.